Welcome to Master Wealth, your ultimate guide to achieving financial success. In today's video, we'll dive deep into the world of ETFs, exchange-traded funds, and explore how to make informed investment decisions. We've received one question repeatedly: how to identify a good entry point for ETFs? How can you distinguish undervalued from overvalued options? This video is your answer, guiding you through our research process and sharing insights on when to pull the investment trigger. But before we proceed, make sure to subscribe to Master Wealth and stay tuned for more valuable content. Let's get started. Choosing what to research. Investing in ETFs starts with making informed choices. First, decide what type of ETF aligns with your financial goals. Are you looking for a broad foundational ETF, a dividend-focused ETF, a growth ETF, or perhaps a specific sector ETF like AI or technology? To begin your research, categorize your preferences and define your objectives. If dividend ETFs pique your interest, secondary research can be a valuable starting point. You can leverage platforms like YouTube to access expert compilations, blogs, or online articles to streamline your initial ETF list. Don't forget, the goal is to narrow down your options for deeper analysis. Classic metrics for evaluation. As you refine your list of potential ETFs, it's crucial to dive into classic metrics that shed light on an ETF's performance. Here are some fundamental metrics you should examine. Management fee. The expense ratio or management fee is a significant consideration. It impacts your returns as it's deducted by the ETF company. Look for fees under 1% for cost-effective investments. Fund history. An ETF's track record is paramount. Opt for ETFs with a history of at least a decade to observe how they've weathered various market cycles. P/E ratio. The price-to-earnings ratio provides insights into an ETF's valuation. A healthy P/E ratio is typically below 25. Assets under management, AUM. A higher AUM signifies a more stable fund. Look for ETFs with substantial AUM, preferably $10 billion or more, for added confidence. Compound annual growth rate, CAGR. This is especially vital for dividend ETFs. It reflects not only price appreciation, but also the growth of the dividend. Aim for ETFs with consistent CAGR. By thoroughly examining these metrics, you can differentiate the promising ETFs from the less attractive ones. Qualitative data analysis. Beyond the numbers, it's essential to explore the qualitative data, the intangibles that can greatly impact your investment decisions. Consider the following aspects. Portfolio makeup. Understand the types of companies included in the ETF. Are they well balanced, or is there an over-concentration in a particular sector? Diversification is key. Company strategy. Dig deeper into the ETF's holdings. Get to know the top companies, their strategies, business models, and leadership. CEO's vision. Learn about the CEOs of the major companies within the ETF. Their vision and leadership style can influence the ETF's long-term performance. This qualitative data provides valuable context for your investment decisions. It helps you gain a comprehensive understanding of where your money is headed. Deciding when to invest. After conducting thorough research and analyzing all the relevant data, you must answer the crucial question: when is the right time to invest? Understand that investing is a long-term endeavor. It's not about trying to time the market perfectly for short-term gains. The market experiences cycles, with the prices going up and down regularly. Even when prices seem high today, your primary focus should be on the long-term potential. Stocks and ETFs have historically shown that prices today can pale in comparison to their value a decade or more down the line. Invest with the future in mind and be prepared for fluctuations along the way. When you're confident in your research and the ETF aligns with your financial goals, don't hesitate to pull the trigger. Embracing dividend ETFs. In this video, we've placed a strong emphasis on dividend ETFs for a compelling reason. They offer the best of both worlds, capital appreciation and passive income. One of our top choices for dividend ETFs is SCHD, but diversifying with multiple dividend ETFs can create a robust portfolio for sustainable passive income. The combination of a rising share prices and increasing dividends can pave the way for financial freedom, such as a nest egg for retirement. Thank you for joining us on this journey to master wealth through ETF investments. If you found this video helpful and insightful, be sure to give it a like and most importantly, subscribe to Master Wealth for more expert insights. Your path to financial success begins here. Stay tuned for more valuable content on Master Wealth.